All right, we're going to go over Topicus.com Incorporated, ticker symbol TOITF. This company is based in Europe, so financials are a little bit different than where we are over here in the US. So once we get over the financial valuation spreadsheet, just keep in mind that some of those numbers on the financials will not be in USD. But once we get over the valuation side of things, they'll be fine. Year to date, company is up 28.8% over the course of 1 year, 35.8%. So Topicus is a spin-off of Constellation Software. It's basically like a sister company or a subsidiary, something of those sorts. And so what they do is they acquire VMS and VMP software companies. And they acquire these businesses and then they build them and grow them and turn them into their own. And then it's just kind of like what Warren Buffett does. He buys businesses and that's it. If you're interested in learning more, I'll drop a link to this video on Constellation Software a little bit more. It goes in depth more on what they do, which is very similar to what Topicus does. It's basically the same thing. So one thing as we go through these financials to keep in mind is, so currently Topicus has a market cap of $5.6 billion and market cap on Constellation Software is 60.6 or $60.5 billion. So this is a similar business, operates in two different locations. This one Constellation is in Canada and Topicus is in Europe, and they do the same thing. So one thing to keep in mind is and they're ran by the same owner, same CEO. It's obvious. Again, go through the Constellation Software video. You'll get a better understanding of how it kind of works between these businesses. Because they're like literally the same business, you possibly have the opportunity to pick up this company at the early stages of where Constellation Software was. So if we go to Constellation Software's financials, and we can go as far back as we can see as 2013. They're doing $1.3 billion in revenue. Okay, so we come over here to Topicus. We do the same thing. We go to financials. Currently doing $1.1 billion in revenue. All right, so 10 years ago, this company, Constellation Software, was doing a little bit more than where Topicus is right now. And as we can see, revenues do continue to grow over at this company. So that is a big key component to keep in mind, is this is not just a random company that we know nothing about. We don't know the forecast of where things are going to go. We have a pretty good idea of where this company could be headed because of the management behind it. There's other companies such as Constellation Software that's ran by the same people that has the same principles behind it. You got a pretty good idea of where it could be headed in the not too distant future, and they'll probably do it a little bit quicker, potentially depending on what kind of acquisitions it can make than what Constellation did it in. But let's hop over to the financials. We've only really got a few years of financial data over here on this company, but we'll work with what we got. So we can see revenue, gross profit, and net income. They are trending higher, obviously very slowly. It is a relatively newly established business here that was incorporated in 2020. So it's only got a few years of financials. So gross margins sitting at 35%, net margins at 8.1%, revenue, gross profit, year-over-year change starting to slow down, but maybe that'll pick back up or at least maintain around 10 to 15, maybe 20% growth rate in the future. Return on invested capital sitting at 15.47%, so that's pretty decent. Cash to debt, we have a lot more debt than cash on both short-term and long-term combined. Free cash flow, net income to free cash flow, we do produce more free cash flow than net income. That is basically because they depreciate and amortize all of their acquisitions. So then it shows all those come in as a negative on the net income, but as a positive on the cash flow. So that's why their cash flows are going to be higher than their net income on this particular business. So over here at the free cash flows, we got $210 million in free cash flows annually. Share count sitting at 130 million shares there. Capital expenditures, only $8 million in CapEx. So $8 million in CapEx on a company that does $1 billion in revenue, or $210 million in free cash flow. And again, these are in euros. This is not in USD. So keep that in mind. That's why the numbers are different than what Seeking Alpha had. So over here at their most recent earnings release, which was actually just a couple days ago, they've got about $162 million dollars. These are also in euros on the balance sheet. They've increased their intangible assets, which they typically will depreciate and amortize So then now they've made some recent acquisitions year over year. So they're up from 896 to 917. So that tells you did at least 21 plus $1 million in acquisitions. Obviously, they also amortize a lot of that throughout the year as well, which we'll get to in the cash flows here in just a minute. So we can see still acquiring more businesses. They do have deferred revs over here. I usually just cross those off of liabilities. Although not real concerned about the liabilities on this business. I'm not concerned about this business whatsoever because of who is running it, and they've got a track record of doing just fine on Constellation software. But regardless of that, we can take off $180 million from 517, which leaves them with about $400 million in debt, and they've in short-term debt, and they've got 162-ish million there in total cash. So still not quite enough money, not enough cash to cover their short-term liabilities, but this company is utilizing all of its cash to continue to make acquisitions and build the business. So over here on the revenue, we can see revenues are growing year over year from 228 up to $278 million. Here's our amortization. So we're gonna go with the 9 months end because that's what 9 months will show up on the cash flows. So we can see they're depreciating. So this is an expense on their net income of $90 million this year, $78 million last year. So that's an expense on our net incomes, but that'll get added back into our free cash flows. So now we come down here to our cash flow statement, and we can see right here, here's our amortization of intangible assets, and we can see here's that $89 million and our $78 million from last year. So that gets added back in. Now we're up to $184 million in cash from operations. And then we come down here, we have to deduct out $5.2 billion million in capital expenditures. So then that leaves us roughly with $178.8 million in free cash flow in the last 9 months. Also, we can see right here, they made about $95 million in acquisitions of businesses in the last 9 months. So if we get the valuations, we got Pure Lunch Valuation, gives them $29.12 per share. Multiples comparison, I threw CSU in there for a comparison in multiples. Gives us $93.42 per share. Graham's valuation is $52.61. Our DCF on the company history tells us we do 15%. So analysts had 15%. I'm going to match 15% as well. That gives them basically a DCF price per share of $47. Rule 72. There's only really a couple sources of growth rate on this, and I figured 28 seems okay. So 28 then goes into 72, 2.5 times. That then goes into 10 years, 3.89 times. So then we could double our EPS almost 4 times. But if I did it 4 times, it would be a kind of a very high Rule 72 multiple of about $224 per share. So I brought it back down to 8. That still gives them a fair value of $112 fair market value. So now we come over to our fair market value on the company. Currently trading at $68.43. Earnings as of lately pushed this stock up, I don't know, $5-6. So it was right at fair market value a couple days ago. But so we're getting a fair market value of $60.80 per share, 30% margin safety, $42.12, and there are no analysts covering this company. So it's one of those off the beaten path companies. But I think the one thing to compare to is comparing this company to CSU because it's a sister company. It's the same thing basically, just in a different country. And if you look at what has been done over at Constellation Software compared to what they're doing over here at Topicus, it's literally the same thing. So you can see if, and not just only if, but potentially when Topicus catches up to CSU, we can see revenue per share on Topicus is $13.80. And on CSU, they're doing almost $471 per share. So I can kind of tell you what potential this company does have behind it. And I tell you what, there's a real good chance that it could follow in the footsteps of where CSU has been. But that is it for Topicus. If you found value in this video, drop a like, subscribe, and comment. And we'll be back later with another stock analysis video.